Welcome to the Financial Freedom Mysteries Unlocked. So how do you know if you're on the right road to financial freedom? So tonight, Dan and I are going to share and reveal a lot of the mysteries. In the end, we hope that you have a takeaway that really it's not that mysterious. The problem is that when you don't think about it and what can happen when you actually take advantage of the things that you probably already know but don't do, it makes all the difference. And so that's why you'll know people that have solved the mysteries and they're doing financially very well, and others that are not doing as well. Not because they can't, not because they really didn't know the secrets. They just didn't understand what they were saying no to, whether it was consciously or subconsciously. So tonight, Dan and I will share and answer any questions that you may have on the Financial Mysteries Unlocked. So the number one mystery that we're going to unlock tonight is the plan for your success. When I talk about planning, I'm talking about the fact that you need to set goals and not just have goals, but have written goals, because it needs to be part of your overall plan. You can do estate planning, you can plan for your children's education, you can plan to get married, you can plan to get a new job, you can plan a lot of things. But if you don't plan for success, how likely is that going to happen for you? It's up to you. So when we talk about the financial freedom mystery, number one is number one for a reason, because you must plan for your success. And there's a whole other presentation on goal setting that we'll talk about in another video. But make sure when you're planning for success, you're writing down your goals and you're giving them a timeline. You know, there's a success pyramid that's been going around for as long as I can remember. And I've been in this career in over 30 years. This really hasn't changed a whole lot. So if you took 100 people right now, Canadians, at the age of 65, you would find that 4% are wealthy. And 4% being wealthy, people always ask, well, what does that mean? They would probably have a net wealth of at least $5 million or more. 26% would find themselves quite comfortable. 8% would still be working. Now, the one thing that's changed is that a lot of people working at 65 today, compared to back when I started in 1990, a lot of those people were working because they had to. But we were never sure if they had to or if they just chose to, because sometimes when you retire, you have to find something to do with your time. And not everybody can fill up 24/7. So today, I find that there's a lot of people at 65 working because they choose to, not because they have to. But again, we don't know. 18% have no problems whatsoever. And then there's 44% that are financially dependent on the family and or government programs. So when you look at the success pyramid, you want to be in the top 30%, because then you're not really going to have to worry about retirement. Those bottom 44%, what happens if they don't have adult children that could help fund it? Because you certainly know that our government is going broker and broker by the day, let alone by the year. And what little they give to seniors who have built this country is pathetic. And I say this because my mother, who's 90, is still alive. She worked almost her entire life and raised kids. And our father ended up passing away at 50 years old, where my mother had to take the brunt of looking after the family. But she raised 7 kids. We're all in the workforce. We've all paid a lot of money in taxes, and yet we're all having to support our mother so that she can live in a decent retirement home. There's a lot of people that fall into that 44% that don't have the luxury of having kids that can help pay for them to live in a better condition. And so they may be in shared accommodations or really living in a room somewhere. But there's a lot of people that are financially dependent on somebody or some program in order to live at age 65 and older. What you don't want is to be in that position, because people can say money is evil, but money also gives you freedom, and it gives you freedom of choice, where you're going to live and how you're going to live. So why do you need to plan for your financial success? Well, as I said, because it gives you choices. So you need to provide yourself with a comfortable lifestyle or retirement, and that's for you and your family. You need to become financially independent in order to be able to have choices. You may have children that you're going to help finance their education. Maybe you haven't got your first home and you want to save for a house. And if you live in the Toronto area, almost anywhere that you can commute within an hour or two, the house prices have gotten so ridiculously high, it makes it almost impossible. But it also means a big dedication to you saving your money to get that down payment. Maybe you just want to ensure that you or your loved ones are taken care of in the event of an unforeseen circumstances. And I'm sure I can say without a doubt that most of us have had to live with some event that we did not expect. And again, me being a teenager when my father passed away was like, could not have been predicted. My father was a very healthy man until he wasn't. And then after that, the rest is history. So we all have things happen. So financial freedom mystery number 2 that we're going to reveal is pay yourself first. I cannot stress this enough. If you don't pay you, who is? I remember when I first started in the business and I hired an assistant, and I said to her, do you pay yourself? Because one of the first things I've learned coming into this business was that you must put something away for you, for your future. And she goes, yeah, because I mean, I'm a financial advisor. And of course, I want to help my assistant to make sure she's doing all the right things. And she goes, yes, of course, I pay myself first. And I said, oh, great. I said, how much do you have saved? And she says, well, I don't actually have any money. I said, well, you just told me that you pay yourself first. Well, I do, but you know, like I like to shop. So I buy a lot of clothes and I go out with my friends. We go out to dinner, we go to movies. Now, I know in the last couple of years, because of COVID, we haven't been spending as much money on those things, but paying yourself first is a habit. And if you don't pay yourself first, you haven't even actually developed a habit that is going to benefit you and your family into the future. So what's the point of going out every day to work, all the stress and the commuting and everything else that you do to get out and get a paycheck if you don't actually get to keep that paycheck, at least in part? So that means you've paid everybody ahead of you and your family, and all of a sudden they're all getting rich and you're still struggling. Well, what was the point of that? You need to take something off the top, whether it's 10, 15, 20% of your pay, That's for you. That's for your future. That's for the right to make decisions on how you're going to live at some point when you decide you don't want to work anymore. It's not a mystery, right? You know, there's other people that save, and you can say, I can't, I'm living pay to pay. Well, over my 30 plus years in this business, I can say most people can find the money if they really want to. But you have to want to develop this habit, because it's easy to spend money on a lot of frivolous things. And that could be just getting a coffee every day. But think of how much that would add up daily, weekly, monthly, and then annually. And you think, holy, I never even realized this is how much money I've been spending. You can find it if you want it. But you also have to remember you're worth it. So don't look at this as something that you're taking away from somebody else. This is something you're giving to yourself and to your family. Not much of a mystery, is it? And that's what I said. You're going to realize all of these things are not that mysterious. But now I'm hoping you take a different perspective and you say, you know what? I am worth it. I think I at least deserve to have 10% of my pay, because the government sure takes enough of my pay, and my mortgage guy takes enough of my pay, and the grocery man takes enough of my pay, and maybe all the other things that you support take a lot of your pay. Why not put some away for you? So the financial freedom number 3 that we're revealing is that you have to have a positive cash flow. Well, what does that mean? It means that you need more money at the end of the month instead of having too much month at the end of the money. Think about that for a minute. You need to have more money at the end of the month, because if you don't, you'll never get ahead financially. So you can't live today and keep thinking, well, as long as I can pay my bills, I'm okay. And you stretch yourself more and more and more. And don't forget, we live in an environment of very low interest rates. How long do you think that's going to last? It's not going to be here forever. I know just from October to November, if you had to renegotiate your mortgage, you would already be paying 0.5% more. And 0.5% might not sound like a lot, but if you've got a very large mortgage, it's a lot of extra cash. So you got to make sure that the money, the flow is there for everything. Paying yourself first off the top means you might have, somewhere between 80 and 90% left for all the other things that you have to live on. But make sure it's positive, because we're not done with the things that you need to do if you really want the financial freedom that you're looking for. So you could become financially comfortable if you don't want to pay yourself first by maybe you get an inheritance. You could marry it, plan it well, pick that person who's financially secure already, and that solves your problem. You might win it in a lottery. Some people try to steal it. We're having more and more people thinking they have access to your property. But anyway, stealing it is one option. You can save it, or you can actually start investing. These are just some of the top ways to become financially comfortable. And we would never advise stealing it, because we don't want to end you ending up in jail, and it's not the right thing to do. So that would mean you'd have to try to find someone that's rich that you can inherit, marry it, win it, save it, invest it. Otherwise, you got to be doing a little bit more on your own. So when I showed you that pyramid of the 30% that's financially comfortable at age 65, Well, what do they do versus what are the other 70% not doing? Part of what they're doing, the top 30%, they set a goal and they make a plan to be wealthy. How else can you be successful if you don't have the plan? Write out the goals. What is it you want? You know, they talk about the law of attraction, but you not only have to attract that into your life, you have to plant a seed in the back of your head that said, I deserve this. And why? Because I am going to go out and do the things that I need to do, whether that's to take extra studies or whatever, to get a better job, to take an extra job so that you can put that money away, whatever it is, but you have to plan. And in that plan, you have to believe that you deserve it. And I'm here to tell you, you deserve it. Don't let anything or anybody stop you from your dream of success, whatever that means to you. Use other people's financial expertise. When we're in a market where markets continue to go up and up on their own, everybody thinks they're an expert. The finances are only one part of making you successful. But when the market's correct, and they will, they always do, this is where you might be making some bad decisions. So use the advice of somebody who's done it already, whether it's a financial advisor or some other professional that you trust. Now, one of our clients that Dan and I have, he's a dentist. He used to get asked all the time how to become successful financially. What should people do with their money? They would ask him. Well, our client would say, talk to a financial advisor. He knew how to make the money. He doesn't know how to keep the money and to grow the money without the financial advisor. And so people thought because he made so much money that he could just give them all this advice. And his advice is, seek a professional. Talk to somebody who knows what they're doing. Sometimes what these people will do is they will use other people's money to help grow their wealth. So for example, if you wanted to start your own business or whatever, you might take a loan from the bank. And the bank is saying, we'll give you this money. You pay us this amount of interest back. And you now can start your business without using your own money. Now, you have to have a business plan. Banks aren't just going to give it freely. But if you can show them that you have a business that's viable, you can get money. You can use other people's money. And a lot of people do this when they buy investment properties, whether it's real estate commercial or real estate residential, so that they can put a down payment, borrow the rest, and then they rent it out. You get ahead financially doing that. Of course, when people invest their money, they're not investing for a month, 2 months, 3 months. They're investing for the long term, because markets go up and markets go down. Recently, we had a client that was getting concerned because the markets are taking a little bit of a dip. And of course, Dan is very much into the graphs and history and everything else. We've both lived through lots of market corrections in our career. But you cannot get ahead financially if every time the market goes down, you decide you want to pull out and keep money on the sidelines, because what happens at that point is that, bang, markets go up before you even have a chance to react. You don't want to put yourself in that position. So when you invest for the long term, you make money. There was a very famous portfolio manager named Peter Lynch. He ran the Magellan Fund with Fidelity. And even though over many years of his career, his returns averaged about 12%, the clients on average made less than 2%. And the reason because they get emotional, they get out when the markets have gone down, and they get back in when the markets go back up. The complete opposite of what you need to do. So if you want to be successful and be part of the 30%, stop looking at day-to-day fluctuations on your statement, what the radio is talking about, some hiccup that's happening somewhere in the world that's making the markets go down. It's not relevant if your time horizon is long-term. And then you might say, well, you know, I'm not as young. I'm not working, so I live on a fixed income, so I don't have as much time. If the market goes down, then, you know, it's going to be harder for me to come back. I don't know how much time I'm going to have. All valid points. But the fact is, you also don't know when you're going to die. So that means you need your money for the long term so that it continues to grow with you, so you can continue to take money out, and it needs to stay ahead of inflation. And it certainly can't do that if it's sitting in the bank or in your mattress. But again, what I've said, the top people that are successful pay themselves first. They're not paying everybody else. They pay them. That goes straight into the investment. Okay, well, let's find out what the majority of the population tends to do. They don't set goals. And if they have goals, they don't follow them. They don't read it. They don't even have it in writing. They have kind of like a wish. Oh, I wish I had money. Oh, I wish I had a new car. But that's not a goal. Goals have to be very specific. But you get a lot of do-it-yourselfers that really don't know how to do it themselves. They don't seek professional advice. If you know a lot of rich people, I can almost guarantee you they've all got professionals looking after their money. And whether it's a doctor, an accountant for, you know, doing the proper taxes, a lawyer to make sure everything's set up properly in the estate, a financial advisor to making sure that they're getting the proper advice on what they need to invest in, where they need, how to diversify, whether or not they need money, all of these things. They're using professionals because they understand if they want to be successful, they need to do that. But the other 70%, they do everything on their own because they think they know. People won't take advantage of leverage. Yeah, I'd like to have my own business, but I don't have any money. Yeah, I'd like to own a house, but I really never save for the down payment. Yeah, I'd like to do this. Again, there's opportunity if you want it. And using other people's money, sometimes it's what's going to help you to get ahead even faster. And remember I said, a lot of people, when they do it themselves, they buy when the markets are going up, so they're always buying high. Then they panic when the market goes down, and the market will always go down. I mean, this is not like something new. Go back in history, you'll always find that the markets go down. They decide to sell because they panic. And when you work with a professional, that professional is going to make you understand and say, what's changed in your goals? Because you told us you had a long-term horizon for this money. And now you're telling me it's short-term because the market went down. When you get out, when the markets go down, you can't really get back in because you'll never go in when the market goes lower. You'll wait for the market to go up. And most times, the people that do that will be buying at a higher high than when they sold out when it started to go down, when they panicked. So how can you get ahead that way? And of course, again, if you don't pay yourselves, oh, you know, you save a little bit, then all of a sudden you see something and you want to buy it and that money's gone. You can't do that if you want to be ahead financially. You need to have something somewhere that you can tap into to have money. And so every time you give it to somebody else because you're buying something or using some service, you've lost the ability for that money to compound for you. Are you feeling like you're not worth anything and you want to make sure you keep yourself in a position to be broke? Because sometimes people say, oh, well, if I had more money, then I would save more. Not true. We've seen people get raises, and what happened? They increased their lifestyle. So all of a sudden, they're matching their lifestyle to their income and not thinking about the future. Jen and I have a client that he's been a client since the beginning of my career, believe it or not. So he's been with me over 30 years. And I always call him my poster child, and he knows who he is. The fact is, from day one, and when I met him, he was still in school, working part-time. But when I met him, we sat down, we talked, and he started investing money from a young age to when he decided to buy his first condominium in Toronto, he paid cash. He eventually moved, sold that condo. The condo we bought next was more money, but he paid cash. He's got a lot of money in his investments because he understands that he is worth putting money away for him, for his life, for his family. He wants to make sure he has choices in the end. When he decides, he says, I don't want to work anymore, he has the right to do that because he's made the plan. He will always be in the top 30% because he follows. He takes an expert's advice. He does the things that you need to do. He pays himself first. He invests the money. Why not move over from the 70% over to the top 30%? Because you'll be happy you did when you get the right to make the choices. The thing is, the number 4 mystery, you got to stop saving your money and start investing your money. I know it can be uncomfortable when markets go up and markets go down. But if you think about it, when you put money into a savings account, all that's happened over the last 10, 15, 20 years is you watched your interest go down, 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 and down. Now we're practically at 0% interest. Come on. Do you think you can get ahead financially if you're not making any money? And now they've just told us that inflation in Canada is around 4.7% and climbing. For the longest time, we were in and around 2% or less. And when the government comes out with these numbers and they say 4.7, if you've gone to the grocery store lately or the gas station, and that's just 2 things, you're going to find that you're paying a lot more than you did last year and the year before. A lot more than 4.7%, I can tell you. And then I just got a letter from my condo board, and for the next 3 years, they're increasing our reserve fund that we have to come up with another 8.4% each owner for the next 3 years. Okay, 8.4 just on my condominium fees. What happens when I go to the grocery store and the gas and everything else that's going up? And as I already mentioned, just from 1 month over another month, interest rates went up on mortgages over 0.5%. Yeah, that's within the 4.7, but we're talking bigger amounts of money. It's getting harder and harder to get ahead. Well, if that's the case, then you need to invest, and you need to invest regardless if the markets are up or down. And many years ago, Sir John Templeton, who's now passed on, but he had started the Templeton Growth Fund back in 1954. People used to ask him all the time, when's the best time to invest? Do you know what his answer was? When you have the money. Not when the market's crapped out, not when the market's high, not when the markets are just flat, not when the markets are anything. It doesn't matter. It's not relevant. You invest when you have the money, because if you have a short-term goal, you're not investing because that money is only there for the short term. But if you're investing for the long term, you invest when you have the money, because no matter what, you're going to reach new highs. It's happened all the time. I mean, I started when the markets were quite low, and now they're way up here. And it's like, who could have even imagined the numbers on the TSX now, or the Dow, or the S&P, or the NASDAQ? No matter where they are today, at some point in the future, they're going to be higher. And whatever they do in between, so what? That's what they do. If you happen to have extra cash during the low periods, you don't sell off because it's going down. You say, I got some extra cash. I want to put more money in because now you're dollar averaging at a lower cost. So you need to invest. Of course, mystery number 5, have an emergency fund. We've all just gone through almost 2 years of COVID. For some people, they actually lost their jobs. And yes, I understand that the government kicked in some money. But if that money was not enough to pay your bills, pay your mortgage, put food on the table, that means you've had to dip into your savings. Now, great if you had savings, but if you had an emergency fund, and in the old days, it was 3 to 6 months in case you were in between jobs and until EI kicked in, whatever. A lot of the people that didn't actually get to work were people that were shut down, that owned their own businesses. They didn't have an opportunity for EI. Now, they might have got government assistance, but the rest would have had to come from their own pockets. Emergency funds now should be 1 to 2 years savings somewhere. Now, if you have investments and you already have a line of credit set up on your house, for you, that may be okay because interest rates are low, but you also have the money, you know, in your investments. And your investments will be growing at a faster pace normally than an emergency fund, where the emergency fund will be sitting, I'll say, closer to cash or cash equivalent type products, so that you can get your hands on that emergency fund when you need it. Now, the emergency fund is not a vacation fund. It's not a pay down the principal of your house fund. It's for a real emergency. And when we were going through COVID, that was considered a real emergency, because it wasn't like you could be out of work and you could find a job somewhere else. When the government shut down a lot of businesses, you didn't have anywhere to go except stay home. But it still costs money. It costs money to live at home, but it costs money if you had rent to pay on your businesses or mortgage. You need to have an emergency fund. You need a place where you can get your hands on money quickly and for a low cost. So if you have the actual cash, that's fantastic. But if you have access to a line of credit, that's okay too. And depending on the plan that you have, but you can't get a line of credit on your house if it's all paid off and there's no line of credit if you don't work. The banks aren't going to loan you money unless they know that you've got cash flow. And you can't have cash flow if you don't got to pay. So you need a paycheck. And that paycheck has to have positive cash flow in order for the bank to want to loan you the money. Because you know banks don't loan money when you need it. They loan money when you don't need it. So part of the planning is making sure that you're set up properly. So for us, for Dan and I, our vision, we work with our clients to help them consistently make smart financial decisions so saving today for a richer tomorrow becomes a reality for you, not a dream. We can dream anything, but we want you to have the reality. So we accomplish this through a comprehensive financial planning process. We'll create the financial plan, and it's designed to increase the probability that you're going to meet your lifestyle and financial goals. Because it's not our goals. We want you to achieve your goals. I did, in the past have clients ask, well, how much do I need? Well, okay, but you got to tell us what you're going to do in retirement, because we don't know. We can tell you what you need to do if we know what you're going to be doing. So is your lifestyle secure now? Will your lifestyle be secure in the future? This is how and what you have to find out. This is what we do. What we do is this whole 6-step financial planning process. So we take you through this process one step at a time. We want to find out where you are today, because we need to know, but we have to enlighten you in case you really don't know what your present situation is. Because until it's kind of spelled out or written out, you haven't been thinking about it because you just go along with life. So we want to find out where you are today. So we collect and then we assess all the relevant financial data we can get our hands on. And, I sometimes get clients, and Dan and I now, we get clients sometimes saying, you know more about us financially than our kids do. Good and bad. We need to know all the financial data, because how can we put a plan together if we don't know where all your money is and what it's doing? But that, in the sense that your kids should understand what it is that you have and what your plans are eventually. So then when we get that information, we're going to help to define both the personal and the financial goals and objectives. What is it you would really like if you thought about it? What is it you want? Well, in order to do that, we've got to have some conversations about your values. What's important about money to you? It can't be what's important about money to us. We have our own goals and objectives that we're saving, and we're doing what we're supposed to do for our lives, our families. But what about you? What's the most important thing? Because maybe when you start thinking about it, maybe you already have enough. So maybe you don't have to balance that out anymore, because you really did save enough. And what you want to do, what's important to you about the money, is enough to fulfill those objectives. But unless we have this value-based conversation about what's important, what do you want? $1 million, $2 million, $5 million, $20 million? I mean, come on. You have to have something that's important about having that amount of money. Because whatever you do, you could be sacrificing today. And life is about balance, because we don't know when it's going to be our last day. So think about what's important about money to you. So we kind of try to take you on this value-based roadmap. Well, we talked about you need an emergency fund in case something happens. We've all been through this recent emergency, and this is global. This wasn't even something in your family, in your company business, in your city. It was a global emergency that impacted all of us. So now, if you had to go through this again, think about how much money we need to put away in this for emergencies now. What reserves? What are we going to do? How much we're going to have to need? Where you are today in the income and the assets, but where is it you want to be? And why? The why is important, because if you have a strong enough why, then you may be motivated to actually achieve your goals. If you don't, things have a way of getting derailed constantly. Now, what debts do you have? And are they good debts or bad debts? Because debt is not in itself bad, depending on what it is. So now, what your debts you have, what do you want them to be? And at some point in the future, because what Dan and I try to do constantly is make sure that all the bad debt gets paid off very quickly. You don't want to be paying unnecessary interest payments. And some people carry a balance on their credit cards that might be like 22%. There's other specialty credit cards that are 29%. Please stop taking away money from your own family to give it to these credit card companies that are making tons of money. And you know who owns the credit card companies? The banks. And you know how much money the banks are making every quarter? They're making billions of dollars. Stop giving away the money. Know what's important to you. Know what's important, what you want to do in your life will help you achieve to get there. And then, of course, have you protected your assets? And your assets could be you personally, because you're the breadwinner. It could be the things that you have. But for the most part, because you know, most people will think nothing of buying their car insurance and buying content or property insurance. But the most valuable asset is you. And you think, well, I'm not spending any money buying insurance on me. All of a sudden you get a critical illness or a disability and you can't work, or you die and you were the breadwinner for your family. And the most valuable asset was left uninsured. So we need to have this conversation, your values, and we take it on this roadmap and we come up with the values and the goals so we can help you accomplish what it is you want to in your life. Retirement planning. Everybody's always talking about retirement planning. If you had to right now, could you afford to retire? Could you afford to retire and in the lifestyle of your choice? Because sometimes people just get sick of working and they don't want to do it anymore, but they really never planned and they can't retire in the lifestyle of their choice. They can retire and have to make changes because all of a sudden now they got a lot less money to work with. So now we've helped you to get your personal and financial goals. Now we're going to identify the financial challenges. What might be the roadblocks to prevent you from achieving the financial goals that you have? Right now, do you have a pension plan? Because you know a lot of companies no longer have them, but they have something there that could help you. Do you have a plan? Because if you have a plan, we're going to help you stay on course because it's so easy to get derailed when life throws a curve at you. Home at retirement, are you going to rent it or own it? If you owned it, could you afford the mortgage? Because if you bought later in life with the prices that were being charged today to own a home, you could possibly still be carrying a mortgage at retirement. But could you afford it? How about the children's education or the grandchildren's education? You want them to get ahead and you know they need to because it's not as easy to get a job right out of high school like it was many years before. I mean, you know, when I graduated from high school, people could get jobs and a lot of people did. They didn't go on to post-secondary. Now, if you want your kids and your grandchildren to get ahead and get better jobs, better paying jobs, they need to go for post-secondary school. That could throw you and your retirement a little bit off rail because you want to help them. But if you do help them financially, it impacts your retirement. And then caring for elderly parents. As I said, my mom is 90 and out of my siblings and I, we're helping to finance her to live in a decent retirement home. She couldn't possibly do it on her own. My father died at age 50, so he was still raising children with my mom, not being able to save a lot of money because they didn't think about the future the same way. We're way more educated today, and we need to take this education and plan wisely our futures so that we have the choices of living in a lifestyle that we choose. and helping support those kids and grandkids that we need to do. But that's a challenge because it might impact your financial future. So when we identify these financial challenges, then we're going to provide a written plan. Now, whether you take a written plan home, a lot of people don't, and the only reason is because they never look at it again unless they're coming back. And that's what we do. We do this on a regular basis and we update the numbers. Is that written plan still going to achieve your financial goals? Well, we've got all kinds of stuff to put in this financial plan. It could be making sure that things are set up with joints with rights of survivorship, having the education plans, because now the government gives you 20% bonus when you put in money for a child or a grandchild, having your RSP set up, whether it's self-directed or a spousal. The biggest gift the government has ever given us is the opportunity to save in a tax-free savings account. Dan and I love the tax-free savings account. And when you're saving / investing for the future, we would always want you to try to maximize that particular account before anything else, because the money comes out tax-free. It can be left to your children, tax-free, probate-free. You can roll it over to a spouse if one of you dies and you're a couple. I mean, there's so many benefits to the tax-free savings. It's our number one favorite thing to do. But again, depending on the personal situation of everybody. So I'm not going to say carte blanche, because some people make high incomes and need to defer some of those taxes through RSPs. But insurance, to protect the most valuable asset you have, and that's you as a breadwinner. Very important. You need protection. And you need to protect yourself when you're healthy, and the younger you are, the less expensive it is. And why you would do that when you're young and healthy is because then once it's done, if you take a permanent policy, you never have to worry about it again. And although it can seem expensive, you budget it in because it's a guaranteed pay in the future to your estate. But the other thing is, if your health changes, you don't have to worry. If if you have a need for more insurance down the road, you don't have to worry that the prices are pricing you out of the market and you can no longer insure yourself. When you get permanent, when the younger you are, the better it is. It's for life. And when you have temporary needs for insurances, then you buy temporary policies. Managing your credit. I had a client many years ago that had his mortgage paid off. Very happy to say he had his mortgage paid off to everybody that had mortgages, because most people had a mortgage back then. But what he was not doing was managing his credit. He must have 20 cards that, and again, this is going back like maybe 20 years. So it might not sound like a lot of money today, although I think it is, but it was a lot of money back then. And he had over $100,000 in credit card debt, spread among a lot of cards. High interest rates, way higher than whatever he would have been paying on a mortgage. And I said to him, I said, you think you don't have a mortgage? This is a mortgage. Because back then, house prices were lower, mortgages were lower. And so $100,000 mortgage could have been an average mortgage, $150,000, whatever, not like today. But the whole thing is that his credit card debt equaled a mortgage. Only he was paying so much more in actual interest charges. But he could tell all his friends and his family, oh, we don't have a mortgage. We own this house. Yeah, I said, you don't own this house, because the credit card debt was unbelievably mismanaged. So what we did was we got rid of most of the cards, kept a couple, got a line of credit on the house, paid off all the creditors, and then he worked on paying down the mortgage. But at a much reasonable rate, he could do that a lot faster. He couldn't get ahead, and he kept taking new cards because, they had all kinds of incentives. But credit management is so important if you want to get ahead financially. Making sure that your wills and your estate is taken care of with powers of attorney and everything else. Recently we had a client and thinking about how she's going to be able to wind up her estate. Well, when Dan and I talked to her about it, she said, oh my God, I never thought about that. I never thought about that. And so now the information we gave her on the estate, she's going to need to talk to her family about, and then she's going to have to get a lawyer once they've decided and agreed upon what they would like to happen, because Dan and I brought in, I'm going to say, new complications, but things that would have been a lot worse if she didn't know that down the road. She would have been dead. That would have been one thing, but her children, her beneficiaries, would have had a problem. And so we brought certain things to light. Again, Dan and I are not lawyers. We're not accountants, but we've had so much experience that we can talk to you about a lot of things from our experiences, share that with you so that when you go to a lawyer or an accountant, you're going there prepared for what would happen. And in most cases, when you do that, going in more prepared, you're going to pay a lot less because you already go in there with a plan. When you deal with us, we're paid to service you through your investments. So take advantage of our expertise. And if it's some other financial advisor, that's fine, but take advantage of their expertise. And there's no stupid questions, because any question that you might have on anything, somebody else is also thinking about that. And when we can help answer that for you, we may write an article about that because we know that somebody else might be wanting to know that same thing. But Dan and I have so much experience that it's free, really, because you're paying us. And if you never take advantage and ask us anything, we're still getting paid. So why not use our expertise to help you plan even better? There's all kinds of stuff that what happens at some point with your plan, we have to start converting money and taking an income. But that can happen in your 40s if you lose your job and need to do that, or it will happen when you're mandated by the government at age 71 to convert any registered plans to an income plan. But we help, and that's what is on an ongoing plan. And then whether or not you need annuities because you can't control your spending or whatever, and you want to just know guaranteed I can budget and you want to buy an annuity, fine. Whether you take CPP early or defer it, the old age security, we talk about that, putting it into the plan. And of course, if you have a pension plan, using that, whether you retire today or you retire in 5 years, whatever it is, it's all part of the written plan, and it's all the information that we need in order to prepare this for you. We talked about insurance. Do you have enough if you became disabled? Do you have enough life insurance to maintain your lifestyle if your working spouse passes away prematurely? Because a lot of families are now 2-income families, but it's 2 incomes because you need it for the lifestyle that you have. Now, all of a sudden, if one's gone, what do? What about a critical illness? And we all know somebody. I can't even imagine anybody not ever knowing somebody who has gotten a critical illness, whether it's a relative, a friend, a neighbor, a co-worker, somebody. And it seems almost more common today than it ever was many years ago. And maybe because of, our lifestyles, the stuff they're putting in the food or how they're growing it, the air we breathe, who knows what's causing the critical illnesses? But the fact is they're here. And we all know somebody who's been touched by it. Well, maybe that extra insurance covering that critical illness could be something that would help you through a time of convalescing, because maybe your disability insurance will only cover so much and you need that extra time. That money can be used for anything you need. And the great thing about critical illness is that you're the one who benefits. If it's on you and you get a critical illness, as long as you survive the first 30 days after diagnosis, you're getting paid one lump sum. It's a gift, because in a lot of cases, if you don't use it in your lifetime or to the point of what you bought, a lot of plans have a return of premiums and you'll get all your money back. It's a no-brainer. I mean, really, it's free insurance. Think of it as a savings plan that's just savings. It's not investments because you're not making any money on it, but one way or the other, you're getting paid. So protect your assets. That's number 6. You are your biggest asset, and you need to protect it through insurance. We're going to help you to execute that plan. We've involved everything we could think of that could come up, but you know, it's like anything. Life can throw you a curveball. But with all the information we have at any given time, we're going to start working on that plan and making sure that you're doing all the things you need to do. And if you're not, why not? I'm like one of those things where, you know, you tell your kids to do certain things and, you know, they're supposed to follow the rules. Even though we're not the boss, you're the boss of us, but you're telling us you want us to execute that plan and make it happen. But then you're not doing your part. We're doing our part, but you're not doing your part. We're going to come back and say, why not? What have you made more important than what you told us was important? What have you made more important? Now you got to come back and answer that question for us. So in order to execute the action plan, there's got to be something that happens. Because the difference between a goal and a dream is a plan and a timeline. Written goals, you want it by a certain time. Otherwise, it's that dream. Oh, I'd like to dream. I had this big, beautiful house on the water. I'd like to dream about, you know, driving a Ferrari. I don't really, but you know what I mean? It's like, so what? And you can fall asleep at night and dream about these things. But a real goal, if you want to execute the plan, is to have it written. What are we going to do? What steps are we going to take? And let's have a timeline. Make it realistic. But without action, nothing happens. So you learn all this stuff, you've got all the mysteries revealed, and you don't do anything. Nothing changes. You go back to your busy lives, but you never make a change. Well, then don't expect anything to happen, because nothing can. Remember, I said number 1 mystery is you have to plan for it. You have to have the written goals. It's all up to you. Now, if you fail and you said, I've done everything, it's unlikely it's possible. Because every time you fail at something that you think that you want and want to achieve, you've learned what doesn't work. So then you make the changes and you take more action to make something happen. Oh, you failed again at that. Okay, what was the reason? You start analyzing. You always take the lesson from the failure. But each time you're planning for that success and you have those written goals, and now you might have to change the action steps in order to get there. But again, it's your planning for success. Don't make everything else more important than you, because in life, there isn't anything more important than you. But in order for us to do all of this, we need to do regular checkups. You go to the doctor every year, you have your physical. Well, every year as a minimum, you should be having your financial physical. And this is what Dan and I do. We kind of go through the process. What's happened since the last time we saw you? What's new? We need to know what's going on in your life so we can continue to help you define your personal and financial goals. What challenges have come up since the last time we made the plan? What tweaking do we have to do to that written plan? And now what's the next step of executing the plan? Oh, and before you know it, another year's gone by and we're doing another regular checkup. But if you want to be successful, you need to do the 6 steps. And not only that, think about it. If you fail, and we talked about that, what do we together need to do to fix it? Because we're either going to come up with some new ideas, but you have to take the action to actually do it, and then come in for your regular checkups. So you've got to keep the plan healthy, and the only way you can do it is if we have regular checkups. We don't want to have in 2 or 3 or 4 or 5 years, and all of a sudden now we've developed something that's really bad and we can't solve that. Because you know, it's the same with your health. If you let something go too long, sometimes the doctors can't help you anymore. You need the regular checkups. It's an inconvenience, I know. And then when we had the curveball of doctors not actually doing physicals, we've had to go that extra time. But don't do this with your financial health as well. It's one thing if you have something going on with your physical health, but Dan and I through COVID have worked right through. We just didn't see everybody face to face in person, but face to face on video, a phone call. But we wanted to make sure that we kept you healthy financially, because this was a setback for a lot of people in one way, and yet it was an advancement for others because you couldn't do anything, you couldn't go anywhere, you couldn't spend money, and a lot of people actually started to save even more than they normally did. And it was kind of like, okay, I got all this extra cash in the bank, what do I do with it? Well, Dan and I can always find something to do with it. So we're always going to give you advice in that way. But the regular checkups will help keep you healthy. So that's the 6 steps that Dan and I will help do that. 7, for your financial mystery is to know your net wealth. Not here, but somewhere written. So whether it's in the financial plan that we provide, and that's based on your numbers, or you run a spreadsheet at home. We've met a lot of clients that actually keep track of the assets that they own. They have their debt, the ones that do have debt, because a lot of our clients don't run with debt. So there's not really a lot of debt, but they have obligations, and that's, you know, your regular stuff to live. But they can almost tell you on any given day that they know what their net wealth is. And the whole thing is that that number you want to see continue to rise. Know what it is, because some people don't realize that they own a lot of stuff, but they owe a lot of stuff. And what's happened is that they're actually in a negative net wealth. Negative, meaning they owe more than they own, because people that have houses think that they're wealthy because their house prices keep going up, but they keep in stride with the debt. You might not own anything. So know your net wealth. It's the only thing that will help you with this financial freedom that you want, of knowing, bottom line, assets less than liabilities is your net wealth, your money. That's real value. Now you say, well, if I'm worth that much, maybe I can retire. Maybe I can take that trip that I've been putting off. Between us talking to you and both of us knowing what your net wealth is, knowing what your goals are, knowing what's important about money, knowing how you want to live in your retirement, we'll tell you if that's possible. But you got to know the net wealth at least. So the next step, you book an appointment with a qualified financial advisor. Dan and I have been doing this for a lot of years. You can go on our website at www.levesquewealthplanning. You've seen Levesque Wealth Planning, I think, on almost all the slides. .com. You go there, find the calendar, book an appointment. If you're not a client, it doesn't cost you anything for the first half hour. If you are a client, we love to see you, because talking to you and making sure that you're achieving your goals is the greatest satisfaction when you say, couldn't have done it without you. And you've looked after me very well after all these years, because it's what we do. We look after our clients like it's our own personal families. We would always put your interests first and making sure that you get what's important to you about the money that you're investing. So let's recap. It's not crap. It is a cap. We want to recap what mysteries were revealed today. Okay. Planning for success. Having written goals. Written goals with a timeline. Pay yourself first, because nobody's more important than you are. Have positive cash flow. So you want to have more money at the end of the month than what's going out. Invest. Saving right now in the bank is giving you near 0%, and that will not help you achieve your goals. But the banks love you because they're using all your money. Have an emergency fund, because nothing can derail your plans faster than a disaster. And when you think COVID, that was a disaster for most people, especially small business owners that got shut down for all that time. Protect your assets. You are the biggest asset you have, and you need to protect yourself through insurances, because insurances cannot be felt until you're hit with an illness, a disability, or death. So people don't like to buy insurance because it's not like a phone where you can touch, feel, and have this investment. No, you don't feel any of that. You'll get paper statements, and even that can be electronic, but you are the most important asset you have. But know your net wealth. Tracking your wealth keeps you moving forward, because when you can see it going up, wow, there's incentive, there's motivation to want to continue. Action. If you want any of these financial freedom mysteries that we've unlocked tonight or today, take action. Without action, nothing happens. Nothing. Action is the only thing that you've got in your power. So this disclaimer is because we are not lawyers. We are not accountants. We are experienced financial advisors that are giving you suggestions, food for thought, but you should always talk to an expert. Come in, book an appointment, go to our website, see on the bottom, Levesque Wealth Planning, just add the .com. You can find our calendar, and you can find a lot of other information on our website as well. So here we are. We take care of almost anything you could possibly need when it comes to money. Our mortgages are done through an actual mortgage broker. I used to be licensed, but it's a lot of work, and we want to make sure that our clients get the best information when it comes to mortgages. And there's so much information out there that we use a broker now. Lots of experience. We have, well, all of our clients are happy. So what can we tell you except come on board, book an appointment. We'd love to at least speak with you and see if we can work together. So thank you very much for this opportunity. and for staying for the whole opportunity of the hour that you could have been doing something else. But I think that the information was probably worth something in the sense of what you've been doing and what now you know you need to do if you want to get ahead financially. Thank you.